The price of gold is firmly above $1,550, but struggling to surpass $1,600 as the next key resistance level and the psychological round number. My next guest says we're on the verge of a global recession and potentially a global financial crisis, which would see increased safe haven demand for both gold and silver. With me to discuss the outlook for the precious metals complex is Mark O'Byrne, Research Director at Goldcore. Mark, good to talk to you as always. When we spoke earlier in the year, you were feeling pretty bullish on gold for 2020. At the same time, a lot of investors were predicting weakness ahead for the US dollar. That hasn't necessarily materialised. So give us your outlook for gold, say, over the next 6 months.
Yes, 6 months is hard to tell. Going out to, we're obviously mid-February now, out to mid-August. But I'd be quite comfortable over the year, and by end of the year, we're guiding that we should do the 20-25%, and that would take us up to $1,900, $2,000 per ounce. Given just the fundamentals are very, very strong indeed. Given the very strong demand that we're seeing internationally, we saw just last week actually all-time record high gold ETF holdings. So total gold ETF holdings globally have hit an all-time record high. So the demand for coins and bars is strong, and the demand from the central banks is strong, given the geopolitical, the financial, the economic, and the monetary risks that are out there. So yeah, I think that 20-25%, that's what we did in 2019, and we think we're going to build on the gains we're seeing in 2019, and that trend is going to continue.
Okay, well, I actually wanted to pick up on gold ETFs, because I was reading earlier that there have been about $500 million of outflows from gold ETFs. That was in the very first few weeks of 2020, according to some research from DataTrek. What was behind those outflows, and sort of what's your outlook for the ETFs within gold, I mean?
Yeah, it's interesting. I haven't seen that research, and I know as of last week, Bloomberg reported the gold ETF holdings were at all-time record highs. So maybe they were looking at, there have been sort of, peaks and troughs and ebbs and flows as there tends to be. So, and I think when the gold price came off recently, it challenged obviously the technical level of 1,600, couldn't get through it. We saw a bit of profit taking and a bit of selling came into the marketplace, and I think there were outflows. But I think over obviously over 2019 and over the last 6 weeks, I think there's been much more inflows than outflows, Yeah. So there is obviously concerns about stock markets at all-time record highs, bond markets at all-time record highs, and there is a lot of even the big passive money internationally is beginning to diversify into gold, and that's evidence obviously in the gold ETF holdings.
So at the start of the year, you talked about the potential weakness in the greenback as a possible tailwind for gold. Given that the dollar hasn't really been under pressure so far this year, we've actually seen it pretty much on the ascent since the lows at the end of December. Does that weaken the case for gold?
I don't think so, no. I mean, a lot of people tend to think of gold solely in dollar terms, and obviously gold is its most commonly quoted price is the futures price in dollars, and most people who trade gold tend to trade gold in dollars. But people around the world, the 7 billion people on the planet, tend to buy gold in the local currency terms, and it's important to think about gold in, if you're a UK trader, you need to think about gold in terms of sterling terms if you're investing in gold, because obviously your exposure is, your family home is in sterling, your pension is in sterling, most of your exposure is in sterling, your income, your business, whatever it is. Therefore, that's a good way to look at it. So it's interesting, what you said there is true, and there's been periods throughout the global market from 2000 to 2011 when the dollar was actually quite strong, the dollar strengthened, and gold actually made gains in dollar terms. So it's not, it's a big help for gold if the dollar is weaker, obviously, particularly gold in dollar terms. But there are periods in time when gold and the dollar actually strengthen at the same time, and that's when you see gold move to near record highs. We've seen this in sterling terms, gold's near record highs, and in euro terms, gold hit a weekly record high in euro terms only, I think it was a week and a half ago, 2 weeks ago. So gold's over 1,400 euros per ounce, and that's the price that gold was in euro terms back during the Eurozone financial crisis in 2011. So it's important to consider gold in dollar terms, but also to keep mindful of gold in other currency terms, because sometimes they are actually a forerunner or a leading indicator. When you see record highs in, say, Australian dollars, as we've seen recently, or euros, it tends to mean you're going to see record nominal highs in dollars subsequently.
Okay, let's talk about the coronavirus, because we've seen it lead to inflation, particularly in China. We've seen this major spike in food prices in the mainland. Do you think this will spur demand for gold as an inflation hedge?
I do, yeah, almost certainly. And I think we're realizing in this globalized economy, when SARS happened, the global economy, China wasn't as integrated into the global economy as it is today, and the Chinese weren't as exporting as much as they did, and nor were they importing as much as they were, And it's interesting, I read the stories now about, China consumes a huge amount of goods from around the world, including food, and the stockpiles of these food goods and goods in particular, and food that's actually on boats that can't get into China. So it's going to have a real world impact on the Chinese economy, which is a massive economy now in the global economy and accounts for a huge amount of the GDP growth that we see in the world today. And it's going to impact the markets as well. And in terms of inflation, sorry, there is a caveat there. The Chinese themselves buy a huge amount of gold, and with China in a form of lockdown, they actually might buy a little less gold in the short term. So that might be a slight headwind for gold, whereby Chinese demand might actually come off a bit. But I think your substantial point about inflation, I think at some stage, inflation is very benign for the last 10, 20 years. I think inflation is going to take off at some stage, potentially quite significantly. And in that scenario, then gold will very much come into play as an inflation hedge. And people will be concerned about, obviously, bonds, which are all-time record highs and record low yields. And they'll also be concerned about as cash, because we're near negative interest rates. So your inflation hedges will become stocks and gold and silver.
All right, now, where do you stand on the outlook for risk and risk sentiment? Because obviously we know gold is seen as a safe haven, and risk-off sentiment tends to drive demand into the likes of gold and the Japanese yen. So on the one hand, we've got those concerns about the coronavirus. That's certainly leading to some caution within the market. On the flip side, we're seeing equities at all-time highs. So what's your outlook for risk?
Well, we've had an extended period of risk on, and obviously that's evidence in stock markets around the world, particularly the Nasdaq and the FANG stocks seem to be leading it, and Tesla, as you mentioned before we started the interview, so the tech stocks and these sexy tech stocks such as Tesla and Netflix have done very well indeed, and they seem to be leading the S&P 500 and Dow Jones higher. But I don't know how sustainable it is, and I think a lot of it is driven by speculation, by stock buybacks, by just massive amounts of debt, and indeed the Federal Reserve engaged in a new form of quantitative easing in terms of the repurchases that are going on in the interbank market in the States. So I think, we've had risk off for an extended period of time. I think we're going to get quite a serious bout we've had risk on for quite an extended period of time. I think we're going to get a serious bout of risk off at some period soon, and coronavirus might be the trigger. But I think there's a fundamentals. I think we're quite shaky to begin with, given the amount of debt in the world. There's a lot of concerns coming into 2020, and I think the coronavirus is almost the icing on the cake, that it might be the straw that breaks the camel's back.
Now, let's talk about silver, because the gold-silver ratio is currently around 85, which basically means silver is significantly cheaper than gold. I was reading some reports that were calling for the ratio to come down significantly. I believe you think silver is significantly undervalued, and if so, why isn't the market attributing it with more value? What are you seeing that the market isn't, basically?
Well, I suppose the fundamentals, there is very anemic supply. Global supply of silver has actually fallen in the last 2 or 3 years. So the Silver Institute do a silver annual yearbook that gets released April every year. So we're anticipating the new one now in 2 months' time, which would be very interesting indeed. But their last report clearly showed the fall in supply from the mines globally, and very, very strong demand internationally, particularly on the investment side, and interestingly, ETF demand and coin and bar demand has been very strong indeed. So I think a similar dynamic was actually seen from 2000 through to 2005, 2006, when silver prices were down near $4.50, $5 per ounce. They went up $6, $7 per ounce, and everybody was saying the fundamentals are very sound. Why hasn't the silver price reacted? And it didn't react for a long period of time, until the financial crisis. It started going up in 2006, 2007, 2008. It had a bit of a wobble after Lehman Brothers for a month or two, and it fell nearly 50% after Lehman Brothers. But then it went from $20 to $10, and then subsequently it went from $10 to $50. So I think we're going to see a similar dynamic play out in the coming months and years. I think silver may be vulnerable in the very short term, particularly if you get a financial crisis and you get some deflationary headwinds in the short term. But in the medium and long term, I think, markets can get things wrong in the short term and they can misprice things. And I think that's fundamentally the case with silver today. As you alluded to, this gold silver ratio is all-time record highs. It's near 88 to 1, with silver at $1,570, $1,570 and $18 per ounce. So, but it's also, when you look at the silver charts, I'm a charts myself, and I do study technicals along with the fundamentals. When you look at the silver charts, particularly the long-term silver charts, if you compare silver to commodities, whether you compare it to oil, compared to the financials, compared to S&P 500, Dow Jones, silver is near all-time record lows. And if you adjust for inflation, silver prices are near prices that they're seen in the early 20th century. So it's one of the only assets in the world, commodities in the world that is 70% below its price in 1980 was $50 per ounce. So silver 70% below the price. Sorry, 65% below the price it was in 1980. Most assets are up 5, 10 times, 10x, as the millennials say. They're up 10x since 1980, and more. So it's fundamentally undervalued, and at some stage the mispricing of silver will correct.
All right, Mark, thank you so much for your time.
Pleasure, Victoria. Thanks for having me on.
That was Mark O'Byrne, Research Director at Goldcore. I'm Victoria Scholar, and thanks for watching IGTV.